Hey everybody, this is John and welcome to the free video. And let's look at Amazon first. So of course gapped up today on big earnings. Oh, this is a really nice, it just afforded a lot of nice plays today where these big earnings plays, if they gap up more than 1.5 standard deviation, the chances are very, very strong that they're going to test their overnight highs. Okay, and overnight highs got to like 357. So it came down today, and then once it kind of broke and started going, it just ran right for it, broke it, and then just kind of fizzled there into the close. We should continue moving higher on Monday. The Amazon, there's no real resistance right now until about $364. Okay, so that was good. And then another one was Google, and that provided some great earnings plays too. The expected move was $20, but it opened up flat, gave us a chance to kind of close out our options and then actually sell some put spreads. And that was great too. And these earnings plays, the way we're constructing them is they've been very, very good for consistency. And the whole idea with earnings plays, they sound like, oh yeah, they're great till they blow up in your face, but doing it in a way where it actually can't blow up in your face. Like it can't blow up in your face is the preferred way to go. And that's why we've been setting up these trades a little bit differently. So that's Google. And then what about the overall market? So the overall market here continues to struggle. Continue to have a daily downtrend within the context of a weekly uptrend. You can see, and what I'm looking at here that's going to happen is that we're going to get a battle. So here is the uptrend line on that weekly chart, and here we are. And I think we're going to have a daily downtrend line until we get to this level, and then things are going to get interesting. In the meantime, even though the markets are choppy, it's actually afforded a lot of great trading opportunities. So part of what not part of, what I'm going to be talking about this Saturday, I'm doing a class specifically on consistency. And it's going to be driven by this whole idea of 2.3% per week. And you can choose if you want to do that compounded or take money out. And this is it's a critical thing because it'll automatically reset your mind to look at the markets from a different perspective. Okay, the average trader mind is horrible in the way that they perceive risk. Okay, they look at it from fear, or they get reckless, and they stay reckless until they start doing enough things that then cause them to be fearful of losing all their money. But what happens is this 2.3% a week formula, which I've kind of honed over the years, and I'll talk more about this on Saturday, is kind of the perfect balance for aggressive yet consistent money making in the markets. And you can see like 2.3% a week. Now, some of you might think that's nothing. I mean, I'm much more aggressive than that. And some of you would be like, oh my God, I'm so happy with that. Obviously, you can tweak this, but 2.3% per week compounded. So if you started with $100,000 and 52 weeks later, you're at $326,000. I mean, that actually does add up. And the most important thing to look at here is this column, okay? And that's the weekly goal, because that is what sets the tone. So the first question on that is that realistic? So this is the account that I had set up for the year on the trading account. It was set up with 156K, okay? And this is gonna be the one where I just followed these rules and did it kind of real time, proof is in the pudding, and ended with a profit of $30,171.50. And of course, that takes into account commissions. And so the formula I have for that is your goal is 2.3% a week, which is about 10% a month. And then a goal of 1% or less, no more than 1% of your total costs in commissions. Okay, so that's the formula. And remember, of course, the idea is that the 2.3% a week gets you in a frame of mind to set about the rules that can make it happen. It doesn't mean you're limited to 2.3% a week. And of course, it doesn't mean that you're going to make 2.3% every week. It just means that that's the average that you're looking for. And that's going to dictate what type of trades you take and what kind of opportunities you pursue. Now, for myself, so 2.3% a week is over 52 weeks is an average of about 10% a month. For January, for myself, I started off with 155,997, had ending balance of 187,565, which is total of 31,567. Of course, I had to deduct from that my commissions, which leaves this much, or 19.34%, okay? And I did this 19.34% with a couple of key rules, okay? Because if your goal is only 2.3% a week, guess how much you're gonna risk, okay? I was only risking 20% of my equity, meaning that if all hell broke loose and like the markets crashed, I only had, and all my options expired worthless. Like if all my options were long and they expired worthless, I'd only lose 20% of my equity. Okay, I had 80% of my account balance in cash, and there's a specific reason for that too. You want to keep some bullets in your gun. Yet with all that, it was a very systematic approach to do this. And you guys have been in the room and watching this, and most of these trades weren't a big deal. A lot of the trades were 1K to 2K trades. Some of the key things were hedging, kind of staying on top of hedging, and then capitalizing on unique circumstances like a Netflix and earnings. And there's a very critical way to do that, which I'll talk about. So, and these are some of the things that I'll be talking about. And the main thing to keep in mind is that you can do this trading small with very little risk. Okay, if you've got a $100,000 account, there's no need to do 30 contracts. You can do 10. Okay, there's no need to have 8 positions if you can have 2. And this means that you will have to consciously recognize that you will be passing up on a lot of potential trades. Why? Because there will be no need to take them, and this is going to exponentially increase your state of mind towards that of a professional trader, and it allows you to be consistent. So you need the state of mind, and you need a set of goals that'll automatically kick that state of mind in, because traders are notorious for, just overriding that, not being able to keep with their discipline. And then you need the specific setups that work best under this, I kind of say restrictions, but it's kind of freeing because it's a lot less stressful. So here's some examples of some trades that I put on today, and I'll show you in the class why I did this one. So USO oil's just been falling, right? Well, it generated a very powerful reversal buy signal today. And it doesn't mean that it's the bottom, but it does mean that this is a trade that could contribute to, remember, what's my goal, 3.3% a week. So what we're trying to do is find trades that can contribute to that, because guess what? Doing a 60-day out SPX Iron Condor does not contribute to this. Okay, that's a good strategy, and you can actually use it in this account if you want to, but it's not going to contribute. That's a much slower process. Okay, but it's not just about premium selling. This is a legitimate signal for this type of trading. And then the CMG trade also. So on this one, we got out of our long call. Let's see, that ended up at a small gain on the long call. This was for the day, but it doesn't show the open P&L since it was closed. But I think we ended up making 25 cents on the long call. But we made $800 on the calls that we sold. That is actually a decent and significant contribution. That's like 1/4 of the profits we needed to reach our 2.3% goal. And you'll notice, this is a very small position, right? And then this is another strategy that I like very specifically in constructing. This is Tesla, happens to be a call credit spread. But again, remember, our overall goal on this is that it's a contributor to our goal of 2.3% per week. So that's why we sold these 7 days out. All right, so here's the class. Last chance to sign up. This whole class, and I know sometimes it gets kind of boring, like, 2.3% consistency. That's not going to help anything. What I'm excited about with this is that the way this is set up, it first of all automatically protects you from all the bad habits that traders have, that they unconsciously have. Okay, and that's the biggest question I get is, gosh, I'll be good for 3 weeks and then I just go nuts and I get fearful, or I get too aggressive and I get reckless. Well, this plan automatically just pushes those habits aside. Okay, and you get into the habit of creating a consistent equity curve, so you can get off of that emotional roller coaster, and that's critical for it. So a key part of that is understanding what kind of setups work. No, doing 60-day out SPX Iron Condors doesn't contribute to this specific plan. Okay, this is a little bit more aggressive. We're going to be looking at 7 and 14 days out, like with some spreads, but combining that with some specific long calls. And then remember that each of those positions we're looking for to a contribution toward that goal, and then understanding if they're not working, when to cut it off, or if everything's not working, when to hedge. And it just becomes a very systematic process. And it's so much easier than just kind of sitting there and kind of waiting for, like, I wonder if this is, let's look for the next big thing. You don't have to wait for the next big thing. You're looking for consistency, okay? So we'll talk about that. Now, it doesn't mean that there's not any potential home run trades. Far from it. It's just that we're a lot pickier, okay? and being a lot pickier. We're also setting up the trade so that if the trade doesn't work out, that it actually doesn't, you're not risking that much. Okay. So there's a ton of stuff like that. And at the end of the day too, if people always like, it's really simple. It's like, hey, you know what, of the strategies that I'll show you in terms of option combinations and stuff like that, if you just want to know one, like, hey, this is the one that can do it for you, I'm going to show you that one too. And then of course, we're going to do an updated big picture outlook, because a lot of things have changed for 2015. My target on the dollar was 95. By June, it's already hit it. Okay. 2015 is going to be very volatile. A lot of things are changing, and I want to cover that in depth. Okay. All right, guys, this is going to be a lot of fun. And gals, simpleroptions.com/class. We're going to dive in, and we are going to learn the mindset and the setups and the techniques and the chart patterns that produce the most consistency. Completely looking forward to this, and we'll see you on Saturday morning.